Welcome back. We are now hearing a lot about this potential extended cycle into 2026 for the crypto bull market. And this thesis is being laid out by Raoul Pal. We're going to be discussing this along with kind of everything else going on in the markets. But if you guys know my thesis, if you've been watching this channel for any amount of time, you probably do, that I do not believe that we have an extended cycle. And we're going to be discussing in this video is you will lose in crypto if you do these things, and you will win in crypto if you do these things. It's very easy to become a millionaire in crypto, and it's very easy to lose a million in crypto as well, especially if you don't understand the mechanics of the market. And part of what Raoul Pal is putting out here, in my view, is part of the dynamics of the market, right? People, it's the same thing MicroStrategy is doing, same thing that Michael Saylor's doing, same thing that we're seeing with other companies that are also getting into the crypto space, whether it's through traditional stock market or through issuing debt to buy Bitcoin. It's all the same thing, right? There's liquidity coming in and there's liquidity going out because somebody is selling those coins to whoever's buying. And so this is the wealth transfer. We are in the bull run right now. We're back over $100,000. The president just said the other day, buy stocks. He said this in a press conference, and we now know more information about his tweet from back in March about XRP, Solana, and ADA being part of the strategic Bitcoin reserve and how the cryptos are. David Sachs was pretty upset at the lobbying effort taking place to get Trump to actually tweet that. So we're going to be discussing all of this and kind of breaking down where the market is, where the market's going, and how you can stay on top of it. Because guys, there is going to be a lot of people in 2026 when Raoul Pal is saying that the market is going to be the peak. There's going to be people who are completely broke. Same thing happened in 2021 into 2022. I said it in 2021. By the middle of 2022, people who were millionaires in 2021 were no longer millionaires, right? They were putting all their money into NFTs. NFTs lost significant value. They were overtrading the market, as was Celsius, as was Voyager, as was 3 Hours Capital, as was, FTX. They were all overplaying their hand. And so we have to be very careful about that because these markets can go up very rapidly and they can also drop even faster. So make sure you guys are subscribed to the channel. Give the video a free thumbs up. We upload almost every single day on this channel to bring you the latest happening in the financial world. And we really talk about the macro. We're zoomed out, kind of understanding what is happening in the markets. We're not looking at day to day. We're not looking at hour to hour. We're not looking at every single announcement that pops up in crypto, but we're taking the aggregate of all this information to understand where the markets are going and then making a thesis and then executing on that thesis. Now, at the beginning of 2025, we got this tweet from the president. Now, when the president tweeted this about the strategic crypto reserve being XRP, Solana, and ADA, there was a lot of questions of like, why was he naming individual cryptos when there's literally over 2 million cryptos in existence and a lot of these cryptos in the top 50, right, with very high market caps. Well, now we're finding out that Trump was furious after lobbyists behind the XRP-tied crypto post revealed to have worked for Ripple. This is according to one news outlet, Politico. And basically, it was reported that the president was upset after he learned that his post on social media saying that XRP, Solana, and Cardano would be included in a strategic crypto reserve was crafted by a lobbyist firm working for Ripple, according to Politico. So basically, that's kind of the situation that's went on here. From what I've read, crypto czar David Sachs was pretty annoyed when he saw that because he didn't even know that the tweet was going out or the post or whatever. And so this kind of gives us a little bit more insight into there's a lot of hype out there, right? And there's a lot of people who look at a tweet like this and they think that these coins are it. And maybe they will be, but it's going to take a lot of time to get these like actual strategic Bitcoin or crypto reserve approved. And after a tweet like this, now it's potentially tied to lobbyists. Obviously, the political landscape is going to politicize this, right? And so that's going to make it even harder to get crypto into the reserves. And this is what I've been saying to my viewers. It's going to take a lot longer than most people think to get a lot of these things going that are being promised. Strategic Bitcoin reserve at the state level or the federal government level. More companies putting Bitcoin on their balance sheet. Like, remember, this is still basically an experiment, right? MicroStrategy may survive through this debt issuance to buy Bitcoin. maybe they won't. Um, Maybe GameStop will, maybe they won't. And so we have to understand where we are in the cycle. I have been saying since I've been back in 2025 right here on the channel that I believe we have one more pump and I believe, are in this pump. Now, listen, this pump can last until the end of 2025. Maybe it'll go into 2026. But we have to understand how we can exit this market as in more wealth and profit than we were before the bull run, because there's gonna, like I said, there's gonna be a lot of people who exit the bull run because they're gonna say, but Raoul Pal said this, or Cryptoviser said this, or Trump said this, and they're gonna be putting all of their eggs in somebody else's opinion. And that's really your own fault, in my view. And so this is part of doing research, right? Doing your own research, understanding how this market works, because a lot of people don't understand how the market works and they don't want to know how the market works. They just want to become a millionaire. It's like going and playing the lottery. Like, you know you're going to lose, but you still do it because there's a potential, very, very slim potential, that you can become, the multi-billionaire. This is why people invest in altcoins that have no value, no usage, no coin, no team, no project, nothing, right? And so, understanding all of this, we have to really take where we are in the cycle. We're in the bull run. It didn't just start, it's been going on for a year now. We're in the 12 to 18 months after the Bitcoin halving, which historically is when we see the most volatility in the crypto markets. And that's exactly what we're seeing. I mean, not just crypto, guys, right? You can become a millionaire, you can become wealthier by investing in crypto derivative products like the Bitcoin mining companies, like MicroStrategy, like GameStop if they buy Bitcoin. And what we've been talking about is looking for the bottom of the market. Are we going to know it's the bottom of the market? No, but we can look at the fundamentals, because the fundamentals do mean something at some point, right? Because people are going to be looking at, wait, is this company undervalued or overvalued? We know that the president's administration wants Bitcoin mining to do well. We know that there's a lot of money being pumped into Bitcoin mining. So it's not just Bitcoin mining, by the way. Like, we are deep in the bull market, right? Because Cantor Equity Partners, this is the company that's going to be merging with 21. That's going to be the Jack Mallers and the Tether company that are going to be basically acquiring Bitcoin. This stock, I mean, went up substantially. It tripled in price. And meanwhile, the actual underlying value of the new stock at the merged company that's going to be 21 is only about $10 to $15. And so this is highly overvalued. So there is still opportunity to make money in this market. But that opportunity is closing quick. And that brings us to Raoul Pal's prediction. He predicts that an extended cycle will occur into 2026, and that Bitcoin and Solana corrections are typical volatility. Now, I do have videos that I want to actually show you of Raoul Pal explaining his thesis. And then we're going to explain why I agree or disagree with his thesis. And I also want to hear from you guys down below. Do you think that we're going to have an extended cycle? Now, before we get into all this extended cycle stuff, I think it's good to take things into context. Now, just the other day, we kind of started talking about this extended cycle conversation, and the video was titled, "Don't Fall for It, They're About to Sell." That's what I really believe about this extended cycle, just based on the previous cycle, because in 2020 and 2021, the halving occurred in 2020. We saw a massive uptrend in the end of 2020. And then we saw a massive uptrend in the beginning of 2021, a little bit of a correction, and then towards the end of the year, the final uptrend of the bull market. And then we saw, right, a bear market occurring. But at the end of 2021, after the Federal Reserve already said they're going to start raising rates, and after the market has already started to fall, we started to see influencers telling people, oh, we have an extended cycle. We're going to be going to June of 2022. That's going to be the top of the market. Guys, that was the bottom of the market. That was like literally the bottom of the market. And a lot of what was occurring was basically the billionaires and the traders were exiting the market as retail traders, like everyday people who were involved just in the hype, they were buying in. So as these retail people were buying in, they were the exit liquidity for the early investors, the traders, the smart money, and the billionaires. And that's why we went down. And in my view, that's why the influencers kept telling everybody, oh, no, this is an extended cycle. Like, keep buying the market, keep buying this dip, because this is not the final dip. We have one more pump. And so while everybody was very bullish and buying in, keep buying, what were all these people the smart money doing? I mean, probably selling. That would just make sense. I sold at the beginning of 2022, and a lot of people were like, "That's a wrong decision. You're not gonna, you're not gonna, you're gonna miss this bull run. We're not going into a bear market. You're gonna miss it." Meanwhile, those people were absolutely 100% wrong, right? Because we kept going down into the middle of 2022, and then at the end of 2022, we had the bottom, right, when FTX collapsed. And so there is still bullish sentiment in the market. Don't get me wrong, we are still in the bull run, but I do think that this is potentially the final phase of the bull run. Now, how long that lasts, Raoul Pal is saying much longer. Well, let's listen to what Arthur Hayes says. And by the way, don't forget to give this video a free thumbs up and also hit the subscribe button. That way you never miss a new video. If you want to help support the channel, click the join button down below to learn more about becoming a channel member. Let's listen to Arthur Hayes.
Trump is going to spend more money, have a bigger deficit than Biden. It's just math and the priorities of the administration. And so I can see Bitcoin going up 10x from here to $1 million by 2028. Especially if we get a change in sort of the Fed and they come back on side and they do quantitative easing, they start cutting rates. And, as you said, Powell's term ends in May 2026. Everyone believes that Kevin Warsh will be the next Fed governor, and he's gone on record basically saying the Fed is not independent. The Fed should do whatever the president and the politicians want, which means print the money, give more of it to the system to act as stimulus. And so I see an acceleration of money printing and fiscal debasement in May 26 onwards. And that's probably when we get the sort of crazy runs in Bitcoin and other sort of fixed supply assets.
Now, notice what he said. He said May 2026 and onwards. Let's listen to that again.
In May 26 onward and fiscal debasement in May 26 onwards. And that's probably when we get the sort of crazy runs in Bitcoin and other sort of fixed supply assets.
So he's talking about the major run beginning in May of 2026, which is a year basically from when I'm making this video, 2 years after the Bitcoin halving. And so this would kind of make sense because if we go back to where we were in 2022 in the middle of the year when the market bottomed, the market did perform much better. Most people didn't feel that it performed well because they were very underwater. But the market still then performed through the FTX collapse, and that's what brought the market down to $18,000 or $15,000, whatever the number was. And so what they're preparing for with the money printing now may actually follow through with this. But what Arthur Hayes is basically saying in this clip is that no, there isn't going to be an extended cycle. The extended cycle, there is no such thing as an extended cycle, right? It's just the cycle. And the cycle will continue and it will go further. Sometimes it'll go shorter. Sometimes we'll have higher peaks or lower peaks. But you guys also have to understand the historical data and the historical context of, the price movements in crypto and specifically, after the halvings. And so we're going to go over this chart in a little bit. This shows the Bitcoin halvings scaled up from previous years. But it's going to be really important to think about that a little bit later in this video when we're going through the Raoul Pal conversation. But before we get there, it's also important to really understand where we are because the banks are now urging public companies to buy Bitcoin. And so I'm going to play this clip. This is from Fidelity, the Fidelity team at the MicroStrategy conference. And, I think that it's important that you guys understand it's not just the banks that are saying this. Now the banking regulator, the OCC, is telling regulated banks that they may buy and sell assets held in custody and are permitted to outsource bank permissible crypto asset activities, including custody and execution services. So I'm going to show you guys this video. We've got a lot of videos to show you. But first, let's listen to what Fidelity says here.
Shareholder value. And then you compare this to Bitcoin. Average annual return last 5 years, 65%. So the question to companies out there is, number one, what's your return on invested capital? Have you calculated it? How does that compare to your cost of capital? Are you generating shareholder value? Do you have extra cash? And if so, what are you doing with that extra cash? And then the ultimate question is, what's your current opportunity set? What are the investment ideas and opportunities that are in front of you? And do you think or do you believe the return on those ideas or opportunities will exceed the opportunity cost of Bitcoin?
Think about that, guys. They're basically telling these companies like, what is the opportunity cost from, expanding your operations and hiring more employees or just holding the Bitcoin? And this is something that companies and individuals and billionaires have to think about, because at the end of the day, you want the largest return on your investment. And if that largest return on the investment is going into an asset versus a good or a service or a business, a lot of companies are going to think about doing that. This is why we're looking at GameStop potentially buying Bitcoin, right? It's not because GameStop is doing anything revolutionary. It's actually really bad because their company, their business model effectively is a failure. And so there is a lot of bullishness, but the companies aren't doing this yet, right? We see a few different companies, but these are basically run by Bitcoin maxis. This is not like an Apple or an Amazon or a Tesla or Microsoft buying Bitcoin, right? People say, well, SpaceX bought Bitcoin. Well, they kind of did, but that was like a few years ago, and they haven't really done anything with it since. What about Tesla? What about all these other companies? They're not doing it. They will, I believe, in the future, but that's going to take time. And so I think that a lot of companies, if they're planning on getting into crypto, why would they do it in the middle of a bull market? And so kind of going in line with what Arthur Hayes is saying, that kind of makes us think, well, if the market falls into a bear market in the middle of 2026, and then we start to see fiscal stimulus pumping and the Federal Reserve quantitative easing and companies saying, wait, we have all this free cash, and the market has bottomed, right? Or close to bottom, right? Significantly lower than where we are or potentially will be in 2025. Let's say we go up to $150,000 and then we go back down to $60,000 in 2026. That could be a great opportunity for these companies to get in there and say, okay, now we're buying. We waited long enough. We've been researching and watching, and now we're at a huge dip, which is lower than MicroStrategy's dollar cost average. So let's buy in. That's a potential as well. Because again, the OCC, which is the Office of the Comptroller of the Currency, they basically are the regulator for the bank. And now they're telling banks that they can hold and custody and buy and sell crypto. This is very different than where we were just a few months ago from a regulatory perspective. Let's listen in. And then we're going to be getting into the extended cycle videos with Raoul Pal and giving commentary on why I believe you could potentially lose a lot of money listening to it, or potentially gain a lot of money listening to Raoul Pal. Let's listen to the OCC first.
More than 50 million Americans hold some form of cryptocurrency. This
He is very intense, by the way.
digitalization of financial services is not a trend. It is a transformation. Here at the Office of the Comptroller of the Currency, we confirm that national banks and federal savings associations may engage in certain cryptocurrency activities responsibly in order to serve their customers. OCC-regulated banks may provide custody services, including the safekeeping and secure storage of cryptocurrencies and other digital assets, all on behalf of their customers. The banks we supervise also may buy and sell cryptocurrencies they hold in custody at their customers' direction. Additionally, these banks may provide other custody services, including record keeping, tax, or reporting services for their customers. OCC banks may use a sub-custodian to provide the same services, subject to appropriate third-party risk management practices. While a range of cryptocurrency and digital asset activities may be performed by banks and their third parties, I want to be clear that the OCC expects these activities to be conducted in a safe and sound manner and in compliance with applicable law. To learn more, please visit occ.gov.
So yeah, pretty intense guy. But bottom line is, they're giving the banks permission to get involved in crypto. And they've wanted to do this for a while, but there's been a lot of regulatory push to keep everything suppressed. We know this. And so everybody keeps saying, oh, well, I can't wait until the bull market. I can't wait until the bull market. When the bull market comes, we'll know it. And that brings us to the extended cycle. Guys, we are in the bull run. We have been in the bull run, right? Remember, the cycle low was $18,000 in Bitcoin, and that happened in 2022. We are now in 2025, and we're significantly higher from this, maybe it was 15,000, 16,000, whatever, $18,000 low, right? We're more than 5x higher than that. And many other cryptos have performed extremely well. We are in the bull market. We're in the midst of the bull market. And in my view, we're at the end of the bull market. May not feel like it, but it is what it is. The charts, the historical data show us that. But how long is this final phase going to last? Is it going to last until the end of 2025? Until maybe near the end of 2025? Or are we going into 2026? Well, forward-looking indicators suggest this crypto cycle extends far longer than most expect, according to Raoul Pal. This is Raoul Pal's model. And it points to Q1 or Q2 of 2026 as the potential peak. This aligns perfectly, according to him, with the US midterm elections when maximum liquidity will be in the system. Let's listen to what he says.
By our work, we suggest that because of the elongation of the business cycle, because rates were higher for longer, the forward-looking liquidity suggests that, again, probabilistically speaking, without any guarantees, this whole thing goes into Q1, maybe Q2 of 2026, which would align with Trump's, trying to win the midterms as well.
Okay. Now let's break this down, right? Because yes, some of what he's saying is accurate, right? But the midterms, from my understanding, are next year, right? And so if they're going to pump the markets, they're going to do it in Q3 of 2026, maybe even Q2 of 2026, because Q3 is effectively right before the election. So they're not going to do it. Like, think about what he's saying here. He's saying that we're going to go into 2026 because of the midterms, and that's going to when you're going to have peak liquidity in the system, and that is possibly true. But at the end of the day, if the peak is in Q1 and Q2 of 2026, that means we're going down after Q2, which means in Q3 and Q4, the market will be much lower in 2026, which I do think will occur. Because remember my thesis, right, based on the previous cycles, is that we approximately, well, it's not approximately, it's exactly 1 year to the day. Go look at the charts. In 2021, when we topped out, it was November 4 or November 5. When we bottomed at the FTX collapse, it was exactly to the day 1 year later. And so when I saw that, it confirmed what my thesis was the entire year based on previous cycles before that. And so what Raoul Pal is saying is partially correct in terms that there's probably going to be a lot of liquidity going into the US midterms, but the midterms are in Q4, end of Q3. So why would they pump the markets at the beginning of the year and then leave everything kind of draining at the end? That's not what I think they're going to do. Guys, that's what they did in 2024. The markets pumped at the beginning of the year, kind of dipped, and then pumped it towards the end of the year again. Now, this could happen. I'm not saying that we are not going to have an extended cycle. In my thesis, I don't think that it's there. It's not there in my thesis. And the other thing to keep in mind is that people like Raoul, these are very, very high net worth individuals who are playing with a lot of money, like more money than we probably even will ever have in our lives. And so they need to be able to exit the market. And to be able to exit the market, whether it's Bitcoin or any other crypto, you need liquidity. Otherwise, the price goes down to incentivize more people to buy what you're selling. And so these billionaires, they need liquidity to be able to sell into the market. So in my view, if I was a billionaire, why would I tell the world, like if I really believed that that was the thesis, why would I tell the world, oh, May 2nd of 2026, that is going to be the top of the market. So make sure May 1st you go and sell. What that tells me is we are not going that far. You need to sell way before then, because otherwise they're going to front run you. And in my view, this thesis, not just what Raoul Pal's saying, but really a combination of kind of like what MicroStrategy, oh, we're going to $10 million. Like, yeah, we're going to 10 million, maybe, but that's going to be in the future. I mean, even Arthur Hayes is being more honest than a lot of the other predictions that we're seeing. Because he's saying we're going to go to $1 million, but he's saying probably by 2028. And a lot of that is going to be because of the continued debasement and money printing, and then that's the next election cycle as well. But he's not saying we're going to go to $1 million now. And people hear this and they'll be, oh, we're going to $1 million, and they're going to expect $1 million, and they're going to wait for $1 million. And listen, if you're a long-term holder, you don't have to really worry about the short-term price movements. But this is a channel for making money. And so the other thing is, when we think back to the previous cycle, I remember that in 2020, Raoul Pal, and I think it was, it may not have been Raoul Pal, but I think it was Raoul Pal and Plan B, the guy who had the stock to flow model. They said that they were looking at September to be the top of the market in 2021. They said this many months before that. So I tagged my calendar, like this is going to be the top of the market, according to Raoul Pal. And then in September, maybe it was August, September, October, Raoul Pal's like, oh yeah, I'm no longer in Ethereum, I'm in this, or I'm no longer in Bitcoin, I'm in this. And everybody in the market was like, wait, what? You told us that the cycle was going to be later. But in earlier conversations, they said it was going to be September. And then they started saying it was going to be later. And, basically the macro top for most altcoins was end of August, early September. And so I always remember that kind of thing as like, why would a billionaire tell you when they are going to sell? Like if I was Raoul Pal and I'm like, oh yeah, we're going to go into Q1, Q2 because of this extended business cycle. Like the retail investor, many of you people who are watching these videos are probably looking at that and thinking it's going to be like this very smooth ride. And then just in Q2, everybody's going to know exactly the day right before everybody needs to sell. That way you're out of the market before the market drops, right? The millions of people who follow Raoul Pal or MicroStrategy or any of these other prediction analysts, right? I'm not saying Raoul Pal is going to be wrong here. I'm just saying if he's in the market, how would he exit if everybody's listening to him and thinking Q1, Q2 of 2026, and everybody believes him and everybody follows through in their thesis, that means everybody's going to be selling in Q1 and Q2 because we're going to be at the potential peak, which means that he's probably not going to be able to sell. And the other millionaires and billionaires who have a lot more in the market than us are not going to be able to sell because there's going to be no liquidity. So then I wonder, like, okay, so then why would they be saying this if this is not going to be the actual top of the market? Well, they could sell before. And so as the market is in a bullish phase, and remember, when we are in the bull run, which we are in, but I'm saying like the massive moves to the upside, people are going to forget that they were bearish just 3 weeks ago, or that the market can go down, or that they need to actually sell to realize the gain. And while they're excited and telling all their friends, oh my God, Bitcoin's at 150,000, Bitcoin's at 200,000. The billionaires, they're selling. And then, the everyday person who's telling all their friends, oh my God, Bitcoin's at 100,000, Bitcoin's at 200,000. Then their friends are like, well, should I buy some? And then they're like, yeah, probably. I mean, I'm going to buy more today because we're going to go to $250,000, $300,000. So when you buy, who are you buying it from? This is a wealth transfer. It's a wealth transfer. When we see the ETFs purchasing Bitcoin over the last couple of years, most of the Bitcoin that they were purchasing at the beginning was from Grayscale. Grayscale was selling and they were buying. It was just a wealth transfer. It was moving the Bitcoin from a centralized one company, Grayscale, into several of these Bitcoin ETFs to make it a little bit more decentralized, a little bit more competition, and not single points of failure or concern, right? But it was a transfer of wealth. It wasn't like they were actually buying the Bitcoin. They were just moving it from Grayscale to BlackRock or Grayscale to whoever. Now, whether that was direct or not direct, I don't know, but people were doing it, right? And they were doing it based on the incentives of the market. And so Raoul Pal talks a little bit more about some of the other indicators in the market, and I think that it's important that we listen to what he says so that we can analyze and see if we think that this is the right thing. But remember, guys, in the market, if you go back to 2021, right, when Dogecoin was pumping like crazy, I remember this very well, and I'm sure many of you guys do as well. Look at the 2021 peak in Dogecoin. Now, people forget why we were pumping that. But there was a lot of like excitement in the market, but how we got to this peak is Elon Musk was scheduled to go on Saturday Night Live. And the whole community was like, oh, he's going to pump Doge. He's going to talk about Doge. He's going to pump it. He's going to say something about it. And we're going to hit $1. Well, we didn't hit $1 and he didn't talk about it. And that was the peak. And by the way, we didn't hit $1 because we hit 70 cents, I think, or 70 or 80 cents at the peak. And what happened after that? All of the smart money sold because all of the, I don't want to say dumb, but not smart money, they were buying. They're like, oh, we're at 80 cents, we're at 50 cents, we got to buy because it's going to go to $1. As soon as he says Dogecoin on air, we're gonna be a $10 Dogecoin, right? We now have a Doge department in the government that's run by Elon Musk, and Dogecoin's still not at $1, right? And so everybody waiting and everybody what did people think was going to happen? Like Elon was just going to go on Saturday Night Live, say Dogecoin to the moon, let's hit $1 tonight, and then Dogecoin would hit $1, and then just very slowly and methodically and strategically, everybody would just go into their account and sell their Dogecoin at the same exact time, and the price would just keep going up because everybody's selling, right? That's not how the market works. It's not how the market works at all. And so people saw it as a rug pull, but it wasn't a rug pull because you were buying as the smart money was leaving. You have to be there before the pump. Once it pumps already, you're too late. You need to be selling the rip and buying the dip, not buying the dip and dip and dip and dip and dip. I mean, in my view, this pump that we're seeing now, and I don't know how long it's going to last, maybe a month, maybe 2 months, maybe 3 months, maybe shorter, I don't know. But this pump is the rip. This is the liquidity entering. This is companies purchasing. This is MicroStrategy purchasing, GameStop purchasing. Maybe other governments around the world are billionaires, but a lot of these purchases are one-time purchases, right? GameStop has $5 billion. Purchase, that's it. Maybe they'll buy more next year, but that's going to be in another year, right? So the market can't sustain elevated levels if it doesn't sustain the demand, right? Supply demand. That's how the market operates. And so the liquidity that we're seeing entering now is anticipating the highs in the market and the integration of crypto into, all the financial systems. But this is going to take a lot of time. And how a roller coaster goes up and down, that's how the market cycles work. Sometimes we go way over where we should be, and then we have to correct back down. And sometimes we go way under where we should be, and then we have to correct back to the upside. That's what I think that we're seeing happening with companies like Bitfarms, which have 20 exahashes of hash rate. But meanwhile, they're only worth about $500 or $600 million in US. So that brings us to the second video of what Raoul Pal is saying. And maybe he's right? Maybe the top of the market will be in Q1 or Q2, but you don't want to be there at the peak. You don't want to be there at the rotation out of the peak because there may not be liquidity to sell into. That's the big issue. Let's listen to what he says.
Well, after the red line, number go up. People say, well, we must be near the top. What happens when we're near the top? This is everyone's fear, always. Near the top, we're nowhere near. Our cycle top indicator is a long way away from anywhere. In fact, we're at very subdued levels, much like we had in 2013 before the largest bull run of all time. Now, I'm not guaranteeing that, but I'm just saying, probabilistically speaking, things are very positive going forwards. I see no reason for any fear.
Oh, guys, no fear. Don't worry. Everything is happening in the market just as it needs to be. You just need to keep buying. Hodl, hodl, hodl. Don't sell any. Even if you're in debt, don't sell any. Even if you need to, pay your mortgage, don't sell your crypto. Everything's going just fine. Buy more, buy more, buy more, buy more. Who are you buying it from? If you have to ask this question as an investor, it's the same thing like Ripple is selling XRP. So if you buy XRP on the market, who are you buying it from? You're buying it from Ripple, right? And so if you're getting 20% yield in a bank account, where is the yield coming from? You may be getting that 20%, but somebody else is getting 20% on a loan that is probably a very high rate, right? Or maybe they're getting 30% on a loan. Credit card debt, 30%, right? So you're getting 10%. they're getting 30% charged. So you're basically just taking money from somebody who can't even afford it anyway. And so this is what you always have to think about. Like, where is the liquidity coming from? He's talking about probably millions or billions of dollars for him and his friends and, clients and stuff like that. Millions and billions they have in the market, right? So to exit with millions and billions, you have to exit on the uptrend. You have to, because if you try to exit on the downtrend, the downtrend goes down faster. That's why you see major pumps, as we just saw with Dogecoin, and then a major dump, right? Because all of the smart money, all of the money that's been in it, they're exiting on the way up. And so the market sometimes trick people. They think, oh, well, the market's going up, so people are just buying and buying and buying. It's like, yeah, but people are also selling, right? If I believe Dogecoin's going to $1, why is somebody selling it under $1? And again, that goes for any crypto, by the way. So we have to question these things, because he's saying that their cycle top metric is showing that we're nowhere near the top. Well, what is the cycle top finder? What is that metric? What are you basing that on? Because when I look at the halving tracker, and I used to show this a lot on the channel, but we haven't really showed it recently. But here we are. What you can see is this is days from the halving, right? Because we're in a Bitcoin cycle. So basically the Bitcoin cycles track based on the days after the Bitcoin halving. This is where we are based on when I'm recording this video at the beginning of it's like the middle of 2025. So it shows we're basically where we were in the peak during the first cycle. And by the way, this is it's scaled up. The second cycle was lower percentage gain or standard deviations. It was lower. The third cycle was lower than the second and lower than the first. But yes, we did have some extension in the second and third cycle than where we were in the first cycle. As you guys can see, the peak was here, then the peak was here. I believe that we are going to see the peak of the cycle right around the same time, maybe even earlier. But it's going to be lower, right? We're going to have a lower percentage gain, which means that we're going to be lower than the scaled up in the last cycle. And last cycle, we would have been, again, scaled up at about 500,000, which means this cycle, we're going to be much lower than that. I would imagine probably maybe 200,000, maybe a little bit more than that. But when? Well, right now, we're basically at the almost 400 days after the Bitcoin halving. These two peaks in the previous two cycles occurred before the 550 days, which means we have about another 150 days until the cycle top will be hit based on the halving tracker. I believe this is more of a better indicator of where the Bitcoin price is going to go, because it's based on historical data. It's not based on, our cycle top finder metric. It's like, well, how did you come up with this cycle top finder metric? And how high do you think that we're going? Notice we only see this side. We don't see this side. So what is this price? $10 million? Is that what people think? We're down here, right? So this is $100,000 right up here. So you're telling me we're going to be at 900 or $1 million this cycle? No, I don't think so. And by the way, Arthur Hayes doesn't think so either. That doesn't mean we're going to be correct. It's just based on our analysis, and I'm breaking it all down for you. And so from between now and 150 days from now, which is basically a little bit over 4 months. So we're now in May. So that would put May, June, July, August. So again, that's putting us in August or September as the peak in the market. A lot of people don't think this is going to be the peak. Listen, guys, we can go and hit, let's say what I'm saying is accurate, right? Based on the halving tracker, we're going to peak in August or September. Okay. Well, people are going to say, but Cryptoviser, this doesn't make sense, because the end of the year is usually when you see the most movements in the market. And yeah, that could be true. But let's say this. Let's say Bitcoin goes to $200,000, right? In August. And then in September, it comes down, and in October, it comes down, and we go down to 100,000. So we went from 100,000 to 200,000, and then came back down to 100,000. And then let's say we go up to 150,000. Technically, we didn't hit all-time record highs again. We still hit higher than we are today, and maybe that will be the top, right? And so in some sense, if we're higher now, higher in a year from now than where we are today, Raoul Pal's thesis would be somewhat accurate, right? Because we are higher next year than we are today. But what if the all-time high happens this year and then we just have some bouncing around as we're entering or moving into the bear market? I mean, it's something you got to think about. And so this guy who was posted these videos on X, he said, this isn't just about getting rich. It's about understanding the most fundamental economic shift of our lifetime. Central banks are debasing currency at unprecedented rates, giving crypto an unstoppable tailwind. The next 12 to 18 months will change everything. Remain bullish. Now, I agree with this, right? And this is why Raoul Pal, maybe he's going to be correct, because there is going to be continued debasement. But this idea that in Q2 of next year, everybody is going to very orderly go into your crypto accounts, on the same day, it's going to be announced the day before. Everyone's going to say, guys, tomorrow, you just go into your account very slowly, quickly, and easily just sell all of your crypto. And everybody's going to do the same thing on the same day, including Raoul and his friends and his clients. And everybody's going to walk into the sunset, billionaires. And the market's just going to maybe fall the day after that. No, that's not realistic. It's not realistic at all. At all. And so my view is I want to be out before the billionaires start selling. I want to be out way before the billionaires start selling. Because here's the deal. Once the market starts dropping, the billionaires are going to be like, no, guys, everything's okay. Just the market's totally fine. Don't worry about it. And we're buy the dip, buy the dip, buy the dip, buy the dip, buy the dip. You don't even want to be in that mindset, right? Because then FOMO gets kicked in and then you end up over trading the market. And this is how you can lose everything. And people are going to lose everything. I'm telling you guys. Whenever, I would say probably by around August, September, I will probably start to say within 1 year, people will have nothing. There will be people in the market who will overtrade the market. Well, they will not take profits. They will get greedy and they will exit with nothing. That's how the market humbles people, right? Because if you overtrade, you're going to lose. If you don't lock in your profits, you're going to lose. This is a wealth transfer. They are debasing the currency. Is it going to be debased overnight? No, this is going to take multiple years, potentially decades. And so when you have the liquidity entering the market, you need to be able to execute. Coinbase is doing this right now. Coinbase is going to be acquiring Deribit, the most comprehensive global crypto derivatives platform, right? They're hiring a lot of people. Every single bull run, they do this. They overextend Coinbase's operations, right? And then they have to pull back a little bit after. It's the same thing if you work at a company and they're doing layoffs. Go look at like the 5 years prior. It was probably another layoff, then they restructured, then they started to hire and ramp up, and then they realized, okay, some of this isn't working, and they pull back. That's a cycle, right? Highs and lows, how much they're spending, how much they're losing, right? This is the same thing in the regular markets. And so you have to take it all into context, right? Vlad, who's the Robinhood app co-founder, what are they? They're doing massive moves into crypto right now. And he said crypto in America, to me, means a rebirth and actually playing catch up and eventually surpassing where crypto has been outside the US for the past 4 years. Let's listen to what he says.
In America has been beleaguered for many, many years. And really, the past administration has tried to make it go away. So crypto in America now, to me, means a rebirth and actually playing catch up and eventually surpassing where crypto has been outside of the US for the past 4+ years.
And so what these companies are doing is they're rolling out products now. But again, we're in the midst of the bull run. Companies understand this. Millionaires and billionaires understand this. It is foolish, in my view, to buy in a bull run, right? Especially like all these corporations that are buying Bitcoin in the bull run. This is ridiculous because in the bear market, they weren't interested. So why would you go in a bull market and start buying for generational wealth? I understand the long-term plan is for the market to go up, but then you just wait for a bear market to then buy in. It just doesn't make sense. And so when you see the market starting to not make sense and the dynamics of the market and the thesis behind the market, like, oh yeah, just perfectly in Q2, everybody in crypto is going to casually walk in and cash out, and everybody's going to walk into the sunset and be happy. Not going to happen, guys. It's not going to happen. And that's why I believe this pump, this upcoming pump is it. I really, really believe this because 12 to 18 months after the Bitcoin halving is the most volatile time in the market based on historical data, based on the halving tracker, and based on the days since the halving. We have 150 days approximately until we hit this same point that we hit in the previous 2 cycles. And for any analyst to go and create new models outside of just the basic data that shows us very clearly where the market is and is going, maybe that is really their thesis. I mean, I completely disagree with that based on everything that we covered in today's video. And I would really am curious what you guys think. Like, do you agree with Raoul Pal? Do you agree with Fidelity? Do you agree with Arthur Hayes? Do you agree with me? Do you have your own thesis? Like, let me know down below. Like, what are your viewpoints on this? I'm not saying that Raoul Pal is trying to mislead people. It just doesn't make sense that somebody with his caliber would think that like everybody's just going to casually go and sell on the same day and the markets are going to be totally fine. I find that highly ridiculous, and I think it's going to actually be the opposite. I think that by that time we're going to be at a much lower point. And going back to Arthur Hayes's comments, you know, a lot of companies are setting up and getting ready to do all of these things, whether it's buy Bitcoin, get into crypto, implement crypto. And the knockover effect is everybody else, right? The retail start utilizing blockchain on the back end without even realizing they're using it. And that is the true key to massive growth and value to these ecosystems. And so I think that will start to be implemented by next year because, you know, the regulatory regime is changing this year and a lot of companies are waiting for green lights to do things or to get approvals or to get licenses or whatever. And then once they have those, then they have to start building the business, right? Or expanding the business out. So that all takes time. And so potentially we're going to top out in 2025, bottom out in 2026, and then from the bottom of the market, there's only one way up. And so let me know in the comments, what are your thoughts on this? Do you believe in the extended cycle? Do you think it's going to happen? Do you remember the extended cycle calls back in 2021 and 2022 and how those did not play out? And where do you think the top of the market is going to be? Listen, I'm not putting a number, like a price on the top of the market because I don't know where the top of the market's going to be. I anticipate it's going to be lower than the previous cycle, which would be under $400,000 or under $500,000. Can we deviate from that? Sure. Can we go much higher than that? Absolutely. We can also go much lower than that. I'm not really looking at the price. I'm looking at the time frame. Because if I have the time frame, I can look for catalysts in the market, such as, let's say, you know, remember I said 150 days. So let's say we're at 100 days and then the market starts really pumping hard and we get announcement after announcement. We hear something about strategic Bitcoin reserve, maybe about the stablecoin legislation, maybe about no tax on tips. Boom. Those are the catalysts that make the markets jump, sometimes higher than the fundamentals actually would be. Like, just because they would say no tax on tips or no tax on overtime doesn't mean that everybody's going to go and take all that money and buy crypto, but the markets will react that way. And so when we can see that within our time frame, we can identify this is potentially the top. Maybe it won't be the top, but I'd rather be out close to the top than be out significantly under the top. That's my viewpoint. That's my thoughts. Those are my opinions. Hopefully you guys enjoyed, whether you disagree or agree, but I really want to know what you think down below. Don't forget to give the video a free thumbs up. Hit that subscribe button. That way you never miss a new video. And if you're up to this point in the video, thank you so much for watching the entire thing. See you guys when I see you. Invest responsibly and crypto on.